so in love with you.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, as we start seeing more and more sellers start slashing their listing prices, will that be enough to cool down the housing market? And will it lead to enough inventory that will potentially lead to a housing market crash? Now, I believe in just 3 months, we're going to have roughly 700 to 800,000 homes that are listed as inventory in the housing market as a result of the plunging buyer demand that is currently going on right now. Now, what we're going to do today is deep dive into an article by Redfin titled Housing Market Update. More sellers drop their prices, but buyers find little relief. Now, hopefully, as the prices start to go down even further, the home buyers like myself or potential home buyers like myself are going to further find relief in this toxic housing market. Now, remember, you guys, I am just sharing with you my opinions. I am not a financial advisor, although on my main career, I am a realtor in Houston and a loan officer in Texas. Now, if you guys can, for the YouTube algorithm, please like this video and subscribe to my channel if you haven't already. And as always, please comment below. Your insights and your experiences are super eye-opening for a lot of people, including myself. Now, let's get started on this article right now. Home buying is as competitive and costly as ever, as soaring mortgage rates make the market less inviting for many would-be sellers. The share of home sellers who dropped their asking price shot up to a 6-month high of 15% for the 4 weeks ending May 1st. That's awesome, you guys. 15%. Now, that's up from 9% a year earlier. That 5.9% increase is the largest annual gain on record in Redfin's weekly housing data back through 2015. For home buyers, the typical monthly mortgage payment skyrocketed a record, and get this, 42% to a new high during the same period. Although a growing share of sellers are responding to the palpable drop in homebuyer demand by lowering their prices, sellers remain far outnumbered by buyers. So the typical home flies off the market at the fastest pace on record and for more than its asking price, at least right now, you guys, right? Or actually in the past, because this article is lagging and we're seeing a lot more signs that that is stopping. But has it stopped for every city across the nation? No, it has not. Houston, in my local market, being one. The article continues. Home buyers continue to be squeezed in nearly every way possible, which is causing some to take a step back from the market. Unfortunately, for buyers hoping to find a deal as competition cools, sellers are pulling back even faster, which is keeping the market deep in sellers' territory. So even though price drops are becoming more common, most homes are still selling above asking price and in record time. Okay, guys, so some key things to think about here is 15% of listings have now dropped their prices, which is the 6-month high. Now, the differential from year over year has never been such a wide gap since 2015. So although this article is projecting that sellers are pulling back just as fast, that may not necessarily be true because we're going into financially hard times. When we go into a financially hard times, a lot of times people will sell their assets to recoup some liquidity to survive through the struggle. So in other words, even though there's super low interest rates for a lot of home buyers being at 2 and 3%, there's still going to be a lot of reasons why people continue to sell their homes. And that fear of missing out is actually going to continue to evolve on the seller side of this market, mark my words. And again, I expect that to happen this year of 2022. Now, what I want to start doing is looking at some graphs from this same Redfin article right now. Take a look at the first one. Okay, guys, so the first graph is home buyer mortgage payments, right? So right now, year over year, right? This is not a 5-year span. This is year over year, 42% increase in mortgage payments, right? Roughly 5% increase in wages, apparently 42% in housing mortgage payments. Do you all understand how that is not grounded in fundamentals and economic or financial fundamentals? You can't keep up this pace. This is not sustainable. Look at 2020 and 2021. So this is a nice comparison. Now, as you can see, the mortgage payments and the growth of that is very, very moderate, right? So a little bit increase in 2021 from 2020, but it's very moderate. It's very level, right? But as we go into 2022, look at the skyrocket. And this right here, you guys, is why I'm saying it's a rug pull. There's no one in their right mind that should be buying a house that is 42% more expensive year over year. And again, you guys, remember this. That's just my opinion. There's a lot of different reasons to buy. So if you are out there buying, that's fine, but just have the right mindset. I believe if you have the right mindset and the right factors in place, you'll be okay. But I don't believe most people have the right mindset or the right factors in place. I quite frankly think a lot of these buyers are just emotional and are going to do whatever it takes to get the house because they have that fear of missing out, right? But the sudden surge, that 42%, is forcing so many buyers to either take a step back or to be priced out of the housing market altogether. Now, look at this next chart right here. Now, this is unprecedented. This chart is called an unprecedented surge in home buyer mortgage payments. So let's look at it over a 7-year period, right? So as you can see, it kind of goes up, down, up, down. It trends upward basically, but it goes up, down, and up, down. But look at this. In 7 years, we have never had anything like the current surge of cost on purchasing a home. This massive surge is what, 3 times higher than the surge of 2018? I mean, look at it. It is a massive surge. And you guys, again, what I'm saying is that is the number one factor that is going to transpire as far as turning the seller's market into a buyer's market. It is the unaffordability. Quite frankly, sellers are starting to have to lower their prices because, quite frankly, buyers don't even qualify anymore because not only do we have those surging interest rates in the 42%, guess what else is happening? Property taxes are way up because now the assessed values are catching up with the massive equity growth. But not only property taxes, homeowners insurance, flood insurance, things like that. There are so many things going on that makes home ownership way too expensive right now. That's why I keep saying, let the dust settle. Now take a look at this next graph right now. Now, these are new listings of homes year over year. So it's saying that, a whole bunch of sellers are no longer listing their houses, but it's only down 5.7%. If you look here, it's obviously higher than 2020, right? So 2020 is way down here as far as new listings. And this right here is part of the reason why we have this inventory shortage. This dip right here, when traditionally this skyrockets up. But the good thing is you can see the inventory, look, it's trending upward like I have been anticipating this entire time. So you guys, I have been right. Why? Because it always happens this time of year. This is nothing new. I'm just reciting history. I'm just calling history, right? But the trend is going up. So from here on out till probably around August, we're going to have continuous surges in inventory and continuous surges in decline for home buying demand. And that is going to further cause panic on the seller side. Let's look at another graph right now. You guys, this next graph here is astonishing. 56% of homes sold above list price. So 56.2% of homes going above listing price. Now, you guys, obviously that's a huge indicator that we're in a housing market bubble, right? I hope you guys can say that, I hope you guys can see that. And if you guys talk to anyone that says, oh, we're not in a housing market bubble, reference this data, reference this article. 56% of homes going above listing price, possibly appraisal value. That is absolutely wacko, you guys. Now, it should be around what, 20% pre-lockdown, about 20%. You see, it should be way down here. So this right here is going to start to plunge, right? And I'm saying it's going to probably start to plunge so fast that it leads to a housing market crash because we still haven't even talked about the recession that's coming, right? We've already had an inversion of the 2 and the 10-year treasuries. We've already had the first quarter of 2022 negative GDP. You guys understand that the writing is on the wall, right? Please comment below. Tell me, please, for the love of God, you see the writing on the wall, right? Anyways, you guys, that's going to kind of conclude this article right now, but I want to close out with some opinions that I formulated over reading this data. Now, essentially, I'll close in my opinion, and that is more and more people are starting to wake up across the nation. There are more and more people that are seeing the writing on the wall. They're starting to see, well, maybe we are in a housing market bubble. Maybe equity surged too much. Maybe the interest rates skyrocketing like this is actually a good thing. So as we continue on in 2022, I'm saying the end of this year, it's going to be a buyer's market, or at least start to transition towards almost fully a buyer's market. But this is going to be the year where we get buying incentives back to the market and the end of going drastically over asking price and appraisal value on the majority of homes that are listed. Again, you guys, these are my opinions. Comment below and tell me what your opinions are as far as the housing market moving forward. Now, as always, you guys, I really appreciate you making this journey with me, reviewing the data with me, and just analyzing it. And remember this, if you're out there investing in real estate, I do wish you luck and I hope you win.